and welcome to the budget highlights. So far as the indirect tax regime is concerned, the budget 2016 may be seen as a watershed event as it proposes complete overhaul of several provisions, particularly with respect to send-back credit. To improve the indirect or probably the index of ease of doing business, the finance minister has proposed several good and nerve-soothing changes in the central excise, service tax and customs provision. However, Mr. Jaitley seems to have fallen in love with the doctrine of imposition of cesses, as he has once again proposed multiple cesses to fix some of the very sticky problems which the Indian economy is facing today. We have three seasoned indirect tax experts with us, Mr. Pratik Jain, Mr. Sumit Majumdar and Mr. R. Siddha. But before that, let's take a look at the key highlights, the key features of the proposed changes in the finance bill. Let us quickly take a look at the changes proposed in the service tax regime. Last year, the finance minister had proposed Swachh Bharat cess. This year, he has come out with this new cess called Krishi Kalyan cess on all taxable service from 1st June 2016, where the input tax credit can be availed for payment of only cesses. Another interesting change is that all of us are aware that the trading of a spectrum, which has become a reality. So, it has been clarified the right to use this kind of spectrum trading is going to be brought under the levy of service tax. To promote the housing sector, the finance minister has of course come out with several incentive plans. One of them is that if in any metros or non-metros, where small houses being constructed by the construction industry, that will be exempt from service tax in case the houses are built on less than 60 square meter. So far as insurance industry is concerned, the service tax has been reduced on single premium annuity policies from 3.5% to 1.4% of the premium paid. Let us go to central excise. Infrastructure says 1%. In case of service tax, it was Kisan Kalyan cess. Now, in case of central excise, it is infrastructure cess of 1% on a small petrol driven, LPG driven, CNG driven cars has been proposed, 2.5% on diesel and 4% on big vehicles like SUVs. However, it has been clarified that no credit of this kind of cess will be available for paying even cess payment. Another cess which has been levied is, which is traditionally known as clean energy cess. Now, it has been renamed as clean environment cess. So, it has been hiked from rupees 200 to rupees 400. And another interesting change in central excise is the central excise duty has been raised to 2% without input tax credit or 12.5% with credit on garments with retail price up to rupees 1000. Retail price of 1000 and more of course. Central excise duty of 1% without input tax credit or 12.5% input tax credit on jewelry with higher exemption limits up to rupees 6 crore has been proposed. Another interesting change is that central excise duty exemption has been granted on concrete mix extended to ready mix concrete for use in construction work. But the most significant change which industry and trade is going to welcome is that the government, rather the finance minister has extended this facility of revising the central excise returns, which was not available. Like we had in income tax, we had in service tax, but not in central excise. Let us go to the custom duty changes. Customs Act for the first time now provides a deferral payment of duties scheme to importers and exporters with a proven track record. Provided there is no case pending or any kind of charges of fraud, etc., no so-called notices have been issued. So, those importers and exporters will be able to avail this scheme of deferral payment. With respect to the customs, the government has proposed a single window project which is going to be implemented at major ports and airports. The two more interesting changes which the finance minister has proposed in the Customs Act is, one is of course which is going to be welcomed by the industry and trade, is that interest rate and delayed payment of customs duty under section 28A, it has been rationalized at 15%, and another change is in the customs baggage rule, where it has been prescribed that the filing of customs declaration is not going to be mandatory for all. It is only for those passengers who are going to carry dutiable and prohibited goods. So, let us now go to our experts for their prima facie reactions. Let me start with Mr. Majumdar. Sir, give us this kind of overview. How do you look at it? I am sure you must be disappointed because there is nothing with respect to GST in this budget.
Well, I would say that, overall, of course, I didn't have the time to go through the entire gamut of all the initiatives and other things are there. But broadly, I would say that there is definitely a shift in strategy with regard to the approach in this budget. We had two budgets from the present government, and there the focus was on investment, development, so that Make in India, those are the buzzwords. But here I find that today's that budget proposals, they find that the focus has shifted from there to welfare measures in rural sector, social sectors like education, health. All these are good because these are also needed. Now the point arises is how will he manage this balancing act of, because the finance minister has also said that he will maintain the target of fiscal management at 3.9% of GDP for this year, and he will bring it further down for next year to 3.5%. Yes. Now, because I do not see any revenue to start with, prima facie, I don't see that much of revenue garnering efforts to meet this extra expenditure which will come because of these things. Secondly, I'm really, you touched a raw nerve when you said that on GST there is nothing much. Yes, of course I was waiting, I was expecting that GST there will be a clear signal that the government is preparing to make the taxpayers and tax administrators ready for GST to come. And to that end, I would have expected the threshold for excise would have been brought up, because now it is 1.5 crores and we are talking about 20 or 25 lakhs in the GST regime. Even the exemptions on the excise side, the reduction is not that much. The 300 exemptions were there in the previous, after that previous budget, and the VAT, state VAT, it is about 199 or 100. So it has to be somewhere in between. So that drastic reduction is also not there.
How exactly the industry is going to react to this cess regime? Lots of new cesses. Last year we had a few cesses. This year we have now this, Kisan Kalyan cess, infrastructure cess, clean environment cess. And of course, he has also, I believe, deleted a couple of cesses.
I agree, but then if you see the larger aspects of this two cesses, I would say let's take Swachh Bharat and this which is coming now, the Krishi cess. The Krishi cess also is not convertible and effectively to a manufacturer, to a service provider, because he provides output services, it makes. A manufacturer will not have service dominance. So the question of utilizing of the Krishi cess for the purpose of services would not arise in the case of a dominant manufacturer. That's the first aspect. You touched the raw nerve by talking about those list of enactments which has been repealed in the, I think, Schedule 15 or whatever it is. But the point is, there are so many enactments which has been touched upon, but the underlying first request of the food and beverage industry on the sugar cess aspect, last month they increased it by 5 times from 25 rupees a quintal to 125 rupees a quintal. Sugar cess remains unintegrated, and this happened on February 1st. And we now have a new budget on March 1st. There is neither the credit aspect has been answered, and it is pending for more than 10 years, the request, and it still continues. But the larger aspects that I thought, there were so many good things with regard to clean environment. We must really appreciate the larger aspect of it. But let's look at, when you talk about Make in India, Mr. Majumdar was talking about Make in India. I still don't understand why do you give enhanced period for normal show cause notice from 12 months to 24 months and 18 months under section 73 to 30 months. So where are we going right now? Why do we, see, you find a complete slew of good initiatives barred by this. And then do you think this is going to really help in litigation control?
Right. It's a little conflicting.
It's very conflicting to that extent.
Absolutely, yes. Let me go back to Pratik for this, if they really deserve so far as Senvat credit rules are concerned.
No, absolutely. Before the Senvat credit, my just initial comment was that I think we were all expecting a blockbuster budget. And, it is like a one-time watch kind of a movie. It's not a blockbuster movie, clearly. Right. But if you put a yardstick that will the industry be worse off after the budget, with what they were on 28th of February. I think it will not be the case. I think there are few good things which are there. Of course, we talked about cess and all that, which I think is more regressive, particularly given the fact under GST also they have powers to continue with cesses.
Yes.
But coming to Senvat credit rules, I think there are a lot of amendments which are proposed, which are long-standing demand from industry, and also to simplify. First, for example, is that below 10,000 rupees, whatever item you purchase, that will be treated as inputs and not capital goods. So that would mean that you can upfront get the credit for the entire amount, which is good. I mean, it's an irritant for small, for accounting, etc. Second, as Sridhar is saying, the ISD mechanism. Now, whatever input credit you have accumulated, you can transfer it to not only to your own manufacturing plants, but to also to your job workers and contract
that's a wonderful thing. Yeah.
So that would mean a lot of credit which gets lost today will not get lost. And also around a year back, they came up with a very contentious provision to say that credit utilization will be on FIFO basis.
Okay.
So whatever credit you have, you just assume that the credit that you booked first will be used first. And that resulted into a lot of problems, because there were situations where I wanted to book the credit, but I didn't want to use it because there is a disputed credit, etc., etc. And in all those situations, I was now looking at a situation where I had to reverse it along with interest and penalties and things like that. They have done away with that FIFO rule to say that now, so long as you have the minimum credit available, that will be treated as, you can use the credit in whatever manner you can, effectively putting it to the to what it was. And you also mentioned about Rule 6 amendment. I think that's also very good, because earlier the Rule 6, there was a conflict that if I am using input services for taxable as well as exempt purposes, law was very clear that to the extent I am using it for exempt purposes, I can't claim any credit. But for the balance, there was an interpretation that you have to bifurcate that between total taxable and total exempt. So that resulted into an absurd situation that whatever I am using 100% for taxable, that also I have to apportion. Now they have said in the revised scheme of things that to the extent you are using it 100% for taxable activities, you can claim 100% credit. 100%. So I think overall scheme of things, I think it's on the Senvat part of it and the simplification procedural part of it, I think you can't complain.
Office equipment credit.
Office equipment credit again. The only thing where I think it doesn't really help is that 18 months going to 30 months for service tax and 12 to 24 for others.
I mean, something bad has to come along with good. Maybe, sir, this custom side. I mean, did you take a look at this custom side? A few changes.
Custom side is basically
the deferral scheme.
Which one thing, in line with Make in India, certain items, the components, the duty exemption has been given, so as to encourage manufacture here, and that manufacture, as Pratik was saying sometime back, that is not really just assembly; it's real manufacture. So such certain things, details I have not seen, but I have seen a few items are there like that, and that was expected. Last time also we had discussed this, your discussion.
Right, sir.
And other good things, some good things. When I started, I didn't tell you the good things that I saw in this budget. Already, Mr. Sridhar and Pratik, they have already covered, but I also harp on that. One is that on litigation, that he has made he said that he has made some reforms. I have to see what exactly the reforms. Reforms in dispute resolution. He said there's some other process bringing.
Sir.
He has increased with the 11 more bench for
Sestat,
which is very much needed. The amount of pendency in the
almost
Sestat,
a lakh, sir. Little more than a lakh.
And time taken in deciding.
Single member bench.
Single member bench adjudication up to 50 lakhs.
50 lakhs, that's a huge amount.
And number of benches that he has increased. And the other things that on litigation, it has been a real headache for quite some time, that how to deal with this, the tendency to go on having litigation by going in appeal. So many steps are taken. But let us see what is the new system that Finance Minister has talked about in reforms. He said that there have been reforms in the dispute resolution. So this will be a very good step. And Senvat credit rules, of course, it has been discussed. I mean, it was waiting for a long time. And collected with the Senvat credit rules will be all those refunds which are pending in Bangalore and Mumbai. Particularly, these are the backlogs. Even in Delhi, they are there. So these also will be, I hope it will be taken care of.
And of course, the tobacco, sir. Of course, you have left.
No. This tobacco and luxury cars, if you see, these are in line with the recommendation of Mr. Arvind Subramanian report, the Chief Economic report on revenue neutral rate. He had suggested the 4 rates, and they said that the demerit rate should be around 40%. So idea is that get used to that demerit goods and luxury goods, get used to having more rate of duty, higher rate of duty, which would be continued in the GST regime as well.
Although on tobacco, I still fail to understand, we did some study some time back, that if you keep levying tax on cigarettes and don't have any tax on bidi, then effectively what happens is that you have a shift of consumption. And if you see the last 10 years data, you see this significant shift is happening from cigarette to bidi, which is unfiltered and it's more of a health hazard. So are we really saying that the rich people should should not have cancer, but the poor people should have cancer? I mean, what exactly is the message? So I think you look at tobacco taxation and look at how taxation is shifting towards cigarettes. It's not really helping the consumption.
2 more good points which were missed out in the first round is you can now revise as a manufacturer your ER1 returns, which I think is a wonderful point.
Yes.
So wonderful point that in turn will bring down the number of disputes, because if I revise my return, though I write number of letters, those letters go into some odd looking paper file. But if I put a revised return and record it on the return itself, that becomes an evidence on record as far as higher forums of judicial fora is concerned.
Absolutely, yes.
And I think that's one of the biggest ones that I should really think of in terms of administration of justice.
Yes.
And a couple of points, I mean, I think we're talking about good things. There have been specific issues which have been clarified or where it was pending for litigation. For example, for construction industry, there was a dispute that whether ready-mix concrete manufactured at site would be exempt or not, and there was I think, decision. Supreme Court said that it will not be. They have amended it to say that it will also be exempt. And then on customs, I think on warehousing, they talked about single window scheme from customs from next financial year. So I think there is an attempt.
The thing which you mentioned, it has got tremendous implication, that warehouse facility, a cold storage facility, and it is not only for your imported goods, imported food items and all, even for your the locally produced good. You know that during the potato crop season, how much potato, quintals and the quintals of potato, they just go waste. And people sometimes, the prices fall down, they destroy it. All the agriculture commodities. So we should have more and more discourse. So this is a good approach in the customs side. So whatever they have done, the customs, he has the limitation. There are certain items having WTO boundaries, but he can reduce, he can't go up. Then there are the your free trade agreements are there with so many agencies. So again, there you cannot go, you have to go do that thing. So with these constants, I think these are the very good steps have been taken.
So on this note, let me wind up this. We have already the prima facie views rightly observed by some of the experts that Senbat credit rules side, good amount of work has been done. Of course, we will go deeper. We will have a separate episode on this, to what extent out of 10, how many marks we are going to give to the excise wing or the CBC or to the finance minister so far as indirect tax regime is concerned. And a lot of steps like single window, and then of course more benches for SysTat. So there are steps, the DRS, the new dispute resolution system going to be put in place. We will look at all these aspects in the coming weeks. Thank you for watching TIOL TV.